Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Market Today on Business Today Television. I'm Sakshi Batra and with me is Shail Bhatnagar. This is the show where you get the closing action on the D Street and we tell you which are the stocks that you need to keep an eye out on, what is the strategy that you need to follow on the markets which had been volatile from the morning and now have recovered substantially from the day's low as well. We'll also be joined by a very special guest during the course of the session. But first up, let's quickly check how the markets are doing at this point in time. About a 52 points of an upside is what you spot on the Nifty. That's 22,412 odd levels again on the Nifty. Now you can spot the Nifty Bank has to be credited with all this recovery in the markets today, with over 1% gains now on the Nifty Bank. 48,000 is now in its kitty. 48,095 currently, a 514 odd point jump on the Nifty Bank clearly. And remember, this is what we had indicated right in the opening session. In fact, before the pre-open had set in, we were discussing and Shail had pointed out that Nifty Bank looks stronger than the Nifty as well today. And that's how exactly it spanned out, Shail.
Good afternoon, Sakshi. And yes, one of those happy days and rare days where Bank Nifty is doing amazing somersaults and higher and higher. So two positive things have happened on the Bank Nifty. Let's start with this index only. Fourth day of rally, and Sakshi and I were discussing this before we started the show कि पलक झपकते ही 2000 पॉइंट 2500 पॉइंट की रैली आपके सामने है at 48,000 till about 4 days ago. This one was somewhere like 46,700. So definitely 23 points, 2,300 points. We'll show the index to you. And actually, what's really good is, you remember we were talking about this gap on Jan 16th and Jan 17th. Well, the moment the index crossed 48,013, that gap got closed.
Oh, okay.
And absolutely now there is no fear in the mind that you will see a record high fairly shortly. The all-time high is 48,636, and that's just one breath away as far as Bank Nifty is concerned.
Yeah.
So maybe tomorrow or maybe next week we'll see a record high. And what's really good is that some of the old stocks have got back their mojo. Kotak Bank, top gainer on the Bank Nifty. ICICI Bank is at a record high. Axis is moving fairly rapidly. And, saviors of saviors, HDFC Bank is in the green.
Yeah.
हरा रहा है.
That's all that we require. We don't want you to move anywhere further, but you should stay in the green.
बस green. 10 पैसे ऊपर. आज तो 5 रुपए ऊपर है. बड़ी मेहरबानी इनकी. और इस वजह से आप देखिए कि there is no negativity. Once HDFC Bank is flat, the remaining banks will help the Bank Nifty do its daily up and down of 700 points. So that's the positive as far as today's markets are concerned. And another thing, Sakshi, I'd like to add, we'll look at the positives first. Tata Chemicals. Let's draw this chart. A 10% uptick on Tata Chemicals is something to be really looked up to. It's now at 1155. There's a massive breakout on Tata Chemicals. The all-time high for this one is somewhere like 1214, and today's high has been 1185. So again, a whiskers distance away from an all-time high. And my understanding is that there is something cooking on Tata Sons listing. The eventual listing of Tata Sons. Remember, the RBI said that if you are an NBFC of some consequence and some size, you ought to be listed. So Tata Sons listing seems to be some news on that side. We'll wait for that news. It's not in the pipeline. This is just my hope that the reason why Tata Chemicals is up because of that. Tata Chemicals owns between 2 and 3% of Tata Sons.
Okay.
And you have Tata Power, Tata Motors, Tata Chemicals, and
Tata
one more.
Investment.
No, one more company from the Tata Group which has.
Tata Consumer.
Yeah, I think Tata Consumer. I'll check that out. But these three, I'm very sure, they own minority stakes in Tata
Okay.
Sons. So that's the value that's getting exploited on these three or four stocks. Tata Power near a record high. Tata Chemicals reaching there. In last 4 days, just look at the move on Tata Chemicals from a
Yeah,
low
yeah.
of 934, you are at 1188, and the volume 1.5 crore shares today is definitely the highest that I can make out in at least 6 odd months. So I'll get you the right number. So Tata Chemicals and Bank Nifty, within Bank Nifty brackets Kotak Bank. These are the three outstanding things for today's markets.
Okay. Well, just the right time to welcome our expert of the day, G. Chokalingam, founder and MD of Economics Research, joins in. Very good afternoon to you, Mr. Chokalingam. It's a pleasure to have you with us on Business Today Television and on Market Today, as is always. Why don't you help us and enlighten us with what do you really feel is really happening in the Tata basket as of now? And do you also have any sense or color as to what could be in the offing that may be pushing all of these stocks in tandem?
Yeah, as your colleague has been saying, there is some expectation in the market about Tata Steel getting listed. Yes, if that happens, that would be positive for all these companies. But then there need not be any euphoria because the holding company discount exists even for other companies within the group. If you look at Tata Investments, there is a still considerable discount, holding discount. So that on one hand, when these companies are holding 1 or 2% stake, on the other hand, there is a holding discount. One need not, rush to the market and buy stock at whatever level. So whoever is holding those stocks can continue to hold and hope for eventual listing of Tata Sons.
Okay. Good afternoon to you, Mr. Chokalingam. A couple of stocks at this phase of the market, if you can share, where your deep insight into balance sheets, your very cautious stance on markets, and a 3-decade wisdom that you've accumulated over so many years helps not only your clients but our viewers as well. What are you looking at?
Once again, thank you very much for your kind words. This is what needed for people like us to remain passionate. Certainly, having seen more than 5 busts in the market, where the young investors miss the important point is the liquidity aspect. And then the valuation aspect, particularly in small and mid cap. So this is what, worrying me for last 2-3 months. You take a stock like Cupid, hardly 200 crore turnover, and the market cap 3 to 4,000 crore, and P ratio about 100. I do understand that the value investing has lost some relevance across the world, but then the fact is that never loses complete relevance. And second, on downside, what rescues you from wealth destruction is the same valuation. So that was completely distorted, in more than 500 micro and small cap stocks. I personally, individually, in the last 3 months, looked at the valuation of nearly 500 small cap and micro cap, and I was shocked. And this is very dangerous situation because what happens, the liquidity is limited. The small cap as a pack, during Corona time, the market cap came down as low as 8 lakh crore. Today, yes, the pack has come back to about 40 lakh crore. Another 15 lakh crore of small caps qualified as a mid cap. But this kind of liquidity is not there in the system overnight or over a month or even over a quarter. So the valuation, stretched valuation and the liquidity aspect only gave. I think the correction is not yet over. It is only a beginning. I may be wrong. This is only just a beginning. However, I remain very, very optimistic on Sensex and Nifty.
Yeah.
There is a 5% upside in the next 3 to 4 months also. So this is the time to tilt towards large cap quality stocks, top 100 or 50 basket stocks.
Okay. Mr. Chokalingam, the reason why we request you to come very often on our shows is because you are a voice of sanity, you are a voice of experience and wisdom, and you are also, a voice of margin of safety. At a time when, all hell is breaking loose and people are running after the next micro cap for 5 successive 20% upper circuits, you bring a degree of calmness and sanity to this kind of a magnificent bull run. Now, because you mentioned large caps look attractive to you, name us one or two stocks which our viewers can add without fear at current levels and maybe hold for a year, 2 year, which could become a crown jewel later.
Yeah. Before that, if you can permit me, I would take only 2-3 minutes, not more than that. Particularly, I am more concerned about the young breed of new investors. Nearly 10 crore investors have come to the market last 5-6 years. And in fact, I interacted with many of them. I'm really getting scared because hard earned money is getting drained in terms of, the perception-driven small and micro cap stocks. One analogy which I use in my workshop, I've seen a lot of young people who drive two-wheelers. They spend a lot of time in saloon, hairstyling, spa, but then suddenly they die because they don't wear the helmet. So the kind of importance they give for the look and feel of their face or hair, not even 1 out of 100 times they spend on safety while driving the bike. Similar thing I see in the market. There are many people who don't give money to wives to buy saree or jewelry, or many sons don't give money to father, but they come and buy EKI 12,000, then when it becomes 4,000, they cry. So my humble request to them, be disciplined. Please do not buy without looking at the valuation multiples, looking at the track record in the market, because I have seen a lot of farmers buying, based on the YouTube and losing money. Personally, I've seen the coming from the highs. So, why, last point I want to tell you is that, honestly speaking, though Mr. Bhatnagar has been pricing, I am a little embarrassed. I can never maintain 100% success rate, and there are many days I keep walking back home regretting why such a foolish thing I did this week. And it happened regularly. Mr. Warren Buffett also, 2013, there was a meltdown in small cap. My BBTC, 10 rupee share, I think, it came down from some 140 to 92 rupees. JKT, 10 rupee share from 140 to 80 rupees. Those are the days I used to be under tremendous stress. One particular day in the first half, I saw on the news, Mr. Warren Buffett's energy stock falling 44% in 3 hours. Then I felt very happy, not as as an output of sadism.
Yeah.
I thought such a stalwart can see 3 hours, 44% erosion in one stock. Who I am? The point I want to tell the young generation, please forget Choka, but even Warren Buffett had a miserable experience with stock investing. So therefore, the point I am saying that hard-earned money, please don't burn it in the market based on social media recommendation without validating the
Right.
fundamentals. Now, coming straight to your question, 2 stocks I would say. I don't know whether it can become jewel, because jewels are found out always in small and mid cap. Again, on the same space, I am very bullish on the long term. I have no change in that view. Only temporarily, I am little nervous on small and mid cap. But again, we have a coverage, 50% coverage on small cap only. So, what I want to tell you is that there are 7 out of 10 stock I cannot invest, but there are still 4,000 small cap where you can find even now 50-100 quality stock. So you invest in them, and large cap you tilt towards, because when meltdown happens in the inferior small cap stocks, that pull down the quality small cap stock also. Therefore, I am saying that you have a tilt towards large cap. Within that, I would recommend strongly Kotak Bank. Personally, I do not hold. What I liked is that it has not participated the way Axis Bank, ICICI Bank has participated in the rally, but that doesn't guarantee the return. But what gives me the confidence is that they have got more than 10-12 subsidiaries. Most of them are 100% subsidiaries, And it's, in terms of holding subsidiaries and unlocking potential, it's a virgin company. It has not yet started, just started with the general insurance. And their investments are few hundred crores, but they are unlocking more than 5,600 crore. This opportunity is there for Kotak Bank, in my view, in more than 7 to 10 subsidiaries. All are 100% subsidiaries. And also, the management last 2 3 days saying that they will focus on the gold loan. That is a booming one, and with management capability, this can do well. So this is one stock I like most, and
Okay.
followed by HDFC Life.
Okay. Kotak Mahindra Bank, HDFC Life. We'll keep an eye out on that. And meanwhile, ladies and gentlemen, the stock markets are at record high levels. For the first time ever, the Sensex has crossed the 74,000 mark. And you do see a 108 point of a jump on the Nifty right now. And that's also at a record high level, 22,463. Currently on your screens, a remarkable recovery has happened in the second half of trade, and especially in the last half an hour or so, the kind of move that we have seen in the markets. And this is largely led by the banking majors. If you look at the top 5 out of the 6 movers on the Nifty, you will find their banking names, especially led by gains on the ICICI Bank, Axis Bank, Kotak Mahindra Bank, IndusInd Bank. These are the top contributors as far as the Nifty is concerned as of now. Most parts of the market have actually recovered from the low points of the day as well. So remember, the IT stocks were down about 1.8% or so. They've recovered nearly 2% from the day's low. It's now 0.25% up in trade as of now. Apart from the banks, it's healthcare, PSU banks, FMCG that's also showing a remarkable recovery as well. So that's as far as the markets are concerned. Remarkable improvement. Mr. Chokalingam, anything that you've heard that's causing this kind of recovery, a sharp recovery in the markets?
Definitely. The last few days, the foreigners also started buying the stocks. And secondly, as I mentioned, large cap has not participated in the massive rally. The rally in the small cap is 3 times the rally in large cap stocks. If you take, last 1 year or 3 year time frame, and a lot of seasoned investors are convinced that this is the time for the large cap. And before election, I believe the market cap can hit $5 trillion, which is 415 lakh crore. So from current level, we are short of the target only by about 5.5%, which is easy to achieve considering the GDP growth number, political stability, and the massive inflow of investors. I believe even the new investors will be slowly forced to tilt towards large cap. So for Nifty to Sensex, to recover whenever it falls, the chances are very high. At least in the short term, they should recover, and we should see very soon before election $5 trillion market cap. I think there will be a lot of celebration from the media once we hit $5 trillion market cap. After that, one should be little cautious on entire market, including large.
So, Mr. Chokalingam, the day, of course, we'll have a heads up on when the market capitalization will cross $5 trillion. You are invited to our Delhi studios, and we'll do a show from here.
My
Say
pleasure.
yes.
I will come.
Okay. Let's just now drill down these gains. Sakshi, the advanced decline ratio on the Nifty is 29:21. So momentum now coming back in the favor of bulls. And what's really interesting is that all 5 banking stocks making up the Nifty are in the green. We'll start with the ICICI Bank. It's the highest contributor in terms of points. You see the Nifty up by about 107 points. 28 of them are coming from ICICI Bank. Then Axis Bank is up about 2%. 18 points are contributed by Axis. Kotak is, to my mind, the star of the day. It's a rare day to see Kotak 2.5% higher, and that's there in front of you. Kotak is contributing 18 points, Bharti Airtel and TCS bringing up 11 and 10 points respectively. Now, Sakshi, sticking to banks, we have 5 banks in the Nifty: Kotak, Axis, ICICI, IndusInd, HDFC and SBI. All 6 of them, Sakshi, are showing short covering. So this move on the bank Nifty as well as Nifty is accompanied by a cut in bearish positions. Therefore, you see the quickness of the gain coming in as far as prices are concerned, and this is an interesting phenomena. Kotak, which is the top performer today, has a decrease of open interest to the extent of about 5%. HDFC Bank has a decrease of 1.6% in open interest, and SBI at a record high has shown a decrease of 3.4%. So the shorts that they were in the system in the morning or in the last 3 or 4 days, that seem to be coming off. This is good news for bulls, and you can see them rejoicing on the Nifty, which is already at a record high. So 22,500 is Sakshi in sight as far as the Nifty is concerned, and the probability of a record high on the Bank Nifty is increasing by every passing minute. Let's hope tomorrow you see a fresh high on the Nifty Bank, which is somewhere like 48,600 or so. Tomorrow is the first day of the fresh settlement on Nifty Bank futures. That should be interesting. And Sakshi, what's really good is that it's now tech, as you mentioned, which is participating. So TCS in the green, Infosys in the green, HCL Tech in the green as far as markets are concerned within the Nifty. And no surprise there, Bajaj Auto, the beginning of the buyback today, 2.2% higher with a rise of 6.5% in open interest. Mr. Chokalingam, would you consider Bajaj Auto at current levels? There was a media interaction with the owners of Bajaj Auto yesterday, and the gentleman mentioned that according to him the true value of Bajaj's share is something like 12,000 rupees. Your comments, sir?
I have looked at it. Somehow I am not able to agree with that. I would definitely agree if export business starts doing extremely well and it starts beating the domestic performance. If they can do that, if they can grow the export sales by 1.5 times or 2 times the domestic sales, then definitely yes. But there are many economies where you see the signs of growth slowdown or deflationary conditions. So therefore, it's at best it could be a hold at current price.
Okay. Just like how we were mentioning, there's a remarkable recovery in the IT space, Mr. Chokalingam. How are you looking at the large cap as well as the mid cap IT names? They've been lagging behind of late. There were several brokerage houses reports and a slew of downgrades also on the large cap IT firms, looking at weaker outlook even going forward. What's your own sense, and how are you looking at the current levels of some of these companies?
No, along with the banks, I have been tracking IT sector since early 90s. Why I'm saying that I have seen the IT sector growing at the rate of 50 to 60% in dollar revenue, and now which is stagnating. For anybody who has seen that kind of cycle, now the stagnating growth in dollar term. Some of the companies have posted degrowth even in rupee term in the December quarter. So that is why for last few years I've been saying that the wealth creation story is over in the large IT stocks. But one can still hold, because if things were to go wrong in terms of market valuation or any other issue, this will act as a defensive. So from defensive conservative point of view, one can hold, or if there is only small correction, one can look at small IT stocks, because the exports are now stagnating in dollar term. Once again, there is a possibility of acquisition of mid-sized IT company, which happened till 2 years ago in a big way, starting from Polaris to Exavac. So therefore, that kind of rally can come. Otherwise, it's all neutral call, and from defensive conservative point of view, one can hold on to all these large IT stocks.
Okay. Mr. Chokalingam, would you stick your neck out on these two companies, JM Financial and IIFL Finance in particular? With the IIFL, this is the second day of the 20% down circuit. In 2 days, the counters lost 36%. This is all because of very strict observations by RBI on the gold loan portfolio of IIFL Finance and the lending of against IPOs for JM Financials. What do you think is happening, and where do you think value will emerge on these two counters?
IIFL, I looked at it, I'm not convinced. Maybe, further 10-20% fall, one can wait. But JM Finance, I saw it. I mean, in fact, the investment banking activity is the most dominating, profit-making business for JM Finance. And we all know they have come a long way in building that business. And unfortunately, the lending business comes a second important business, and therefore this even might affect that. And hence, when I looked at the fundamentals, I would believe that if there is any further correction of even 10% from current level, then one can definitely look at JM Finance for medium to long term, because the management has really built very well the investment banking business, much stronger, and that's the most dominating. But I would be comfortable if stock by any chance falls another 10%.
Okay. What's not moving in the markets is still the broader markets, the mid and the small caps, and the small cap index is still down about nearly 2% in trade. And we've been seeing this index, falling at least for the 5 or 6 trading sessions consistently. This started from the time the SEBI really made those observations and talked about risk management efforts being taken by AMFI to protect the larger base of investors which are continuously pouring in money over the last 1.5 years in the broader markets, in the mid and the small cap space. And after that, this space has been consistently looking weak. Mr. Joglingba, how are you looking at the broader markets, especially the small caps, and the kind of concerns that are being raised in the recent while?
Just on a lighter note, the last 30 years, 35 years, I have seen very aggressively the small cap back, because let me tell you, this is the first time in my career, my profession, I wrote a research note consistently saying that, don't have more than 30 to 40, 50% the exposure to small cap. But
Okay.
till 2, 3 years back, starting from 92, I always invested only in 100% small cap and mid cap. So this is happening only last 1 year or 2 year, because I also learned, the limitation of suggesting 100% in small and mid cap. Having said that, on a lighter note, what I wanted to make a statement is that in 33 years, I have seen burst in small and mid cap at least 5 to 7 times. Unfortunately, the market never attribute that fault to profit booking by smart people or HNIs. They always find fault with Lehman Brothers, or European economy going into deflation, or Greece economy, which accounts for 0.5% of the global GDP, falling and causing a crisis. But I never seen anybody talking about, smart people taking out money and there is no liquidity and therefore falling. And I belong to this, this school of thought. You know, it is likely to fall further, because half of the stocks do not have valuation comfort, and I am ready to compromise on the valuation, which I learned after 1819. So I am not saying that you should look for single digit PE or 1820 PE. I am saying you pay even 100 PE, but ensure that the profit grows at least 50%. So even after making such compromise, I can tell you that more than half of the stocks do not qualify in the small and mid cap space. So therefore, I believe anybody who has seen the market for 30 years, seasoned investors, HNIs, entrepreneurs, they would have already taken the profit out on the table. So now it is a time for all the new investors to battle it out. So even now it is not too late. I'm not saying zero in small and mid cap. I'm saying simply follow this. If you are paying a P of 50, see that profit grows at least 25%. Otherwise, take the profit out and put it in the FD. And that process not yet started. I may be wrong. I think it will start. And therefore, more pain will come from overvalued, stretched small and micro cap stocks. And hence, I think the product market would remain weak, at least for a few weeks or few months.
Okay, with that note of caution, Mr. Chokalingam, let me just force you to open the bullish side of your brain. I'll tell you why. You gave us wonderful picks like Nesco. Sadly, I don't have my diary at office here where I note down with great detail all the picks that you mentioned.
Craftsman Automation.
Craftsman
Indoco.
Auto. Kya baat, kya baat. Yes.
That's the one that I remember from last time. Yeah.
Yes. So we talked about Nesco, we talked about Craftsman Automation. Any new jewels that you think at these beaten down levels make sense for you? Maybe Awas Financiers?
I will add two stocks. We have a research report on them. One is Sterling Tools, and second is Indoco Remedies. If you look at the listed formulation players like Aries Pharma, JB Chemical, they trade at 6 to 7 times enterprise value to annual sales. Now, at current valuation, Indoco trades at a 3 times domestic formulation sales, EV to domestic formulation, just about 3 times. I am assuming one-time valuation for other businesses like Unichem Pharma, other businesses, they were taken over at around 1.7 times. So even if I assume one time for export formulation and 3 times for domestic formulation, the current price is justified. However, other companies are trading at as high as 6 to 7 times. So even if I put 4.5 times for the domestic formulation business, I think Indoco Pharma deserves more than 430. I may be wrong. I do not own the stock directly or indirectly through any proxy, but I am 100% confident that Indoco will be a safe defensive stock with a promising return. And second, Sterling Tools. I like this stock a lot. I've been waiting for the stock to correct, then we picked up. Interestingly, it is into fastener business, and the Japanese player has a 5% stake in it. Very interestingly, if you look at the latest balance sheet, they talked about in detail their foray into electric vehicles. They make control units, the EV control units, and the kind of growth that unit has done in the last 3 years is amazing, exponential growth through 100% subsidiary. So I believe, like how TVS Motor is unlocking money, proposing to unlock by divesting or inviting foreign participants in the EV business, I believe this small company also can try that kind of thing, like inviting, other stakeholders and growing that EV business in a big way. So therefore, Sterling Tool deserves much higher EV PE multiple, and hence I would consider, I may be absolutely wrong, I would consider Sterling Tools and Indoco as the best picks in the small cap segment.
Okay, Sterling Tools, let's just drill down a little bit more on this one. The all-time high on Sterling Tools is in the vicinity of 477 rupees. That was hit way back in December of 2017, and the most recent high has been 450. The stock, of course, now available at 348 rupees. Sakshi, why don't you just take over the market? I'll meantime find some more interesting data on Sterling Tools. Let's just do the basic drill on this particular stock, what Mr. Chokalingam has suggested. By the way, fresh record high, intraday high on the Nifty now.
Absolutely. We are seeing a very, very substantial move on the markets on the back of banks, clearly, that are leading all the way and leading markets to newer highs. In fact, for today, when we talk about the Nifty, the all-time high that we now have on the Nifty is 22,473. So I think this is the first time we've crossed 22,450 and of course 22,473 as well. All right, on that note, Mr. Chokalingam, many thanks for being with us on the show and sharing with us such wonderful pearls of wisdom and sharing all those stocks and ideas as well. And we will continue to keep a track on Sterling Tools and Indoco remedies that you've suggested today until we meet next time and you share some more shares with all of our viewers as well. Many thanks and hope you have a fantastic week ahead. Let's look at how the markets are doing at this point then. 22,462, currently 104 points higher, almost 0.5% up for the Nifty. It's almost 1% higher for the Nifty Bank. Slight profits are being taken off the table from the highest point as far as the Nifty Bank is concerned. But still, if you look at the top movers, it's Kotak Mahindra Bank that clearly Mr. Chokalingam has been bullish on as well. 2.6% higher right now as the top mover on the Nifty. Axis Bank follows, Bajaj Auto, Divis Laboratories and Bharti Airtel are the other top movers. What we'll do, viewers, is we'll take a very, very quick break, and when we return, we'll also be joined by Osho Krishnan, Senior Research Analyst, Technical Research at Angel One. Be with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra, with me is Shail Bhatnagar, and now we're joined by Osho Krishnan, Senior Research Analyst, Technical Research at Angel One. Osho, welcome. Good afternoon to you. Thanks a lot for taking the time out. Its record high is again on the markets, again on the Nifty and the Sensex, driven by a whole host of move that we are seeing across the private banks and the large cap banks as well. What are you keeping an eye out on? Any two stocks that you can share with our viewers?
Today we have seen a very strong U-shaped recovery in our market. The whole turnaround in the bullish sentiment has been seen in Nifty. The banking has been the major traction. So my first recommendation is from the banking space. In banking, IndusInd Bank is looking very positive. If I have to tell about the private sector banks, many banks have given a strong breakout like ICICI, Axis, but IndusInd Bank is having a quite decent risk-reward ratio at present levels. So my recommendation is to buy IndusInd Bank at current levels near about 1555 to 1560 is the zone for the buying range of IndusInd Bank. On the higher end, one can expect a target of 1600, while stop loss should be kept around the zone of 1530. So this is the first recommendation. The second one is HDFC Life. HDFC Life have seen a strong pullback in the last 3 to 4 trading sessions, and it is sustaining above the zone of 600. So on technical chart, it has formed a double bottom pattern. So from here onwards, one can expect a decent up move. The first critical resistance is placed around 630. So that should be the immediate target. While on the downside, 595 should be kept as the stop loss. But the time it surpasses the zone of 635, then from there onwards, I am expecting a strong rally towards 650 odd levels.
Okay. Good afternoon to you, Osho, and a very warm welcome on market today. HDFC Life, of course, is bouncing from its 200-day DMA today, and it's been there about for the last 3 trading sessions. This potentially has a strong tick on the upper side. Let's see how things shape up over the next 2 or 3 trading sessions. The volume here is somewhere in the vicinity of 44 lakhs 64,000 on HDFC Life, and yes, at its highest level since 19th of January. There have been some tweaks that the government has done in insurance norms, and HDFC Life, being the leader in the private sector space of insurance, has seen a strong uptick, Sakshi. The last 5-7 trading sessions belong to the bulls, but far cry from its most recent high of 710 rupees that we saw somewhere in December of 2023. So these are the 2 stocks that Osho is discussing on the long side: IndusInd Bank, 5th day of an up move, and HDFC Life so far. Osho, would you have a view on Tata Chemicals?
Yes, Tata Chemicals have seen a very tremendous up rally because the traction has been seen from the inception of this week, and from there onwards, the time it crossed the zone of 1000, there has been no looking back in this counter. So many have traded in the rally because from 1000 it has moved towards approximately 1190, 1200 odd levels. So there has been a lot of trading speculation that has been seen in this counter. But overall, even from here onwards, because the counter have seen a very strong upsurge of approximately 20% in the week. So I'm not very much bullish as of now in this counter, because from risk reward perspective, the counter have surged a lot. But even till now, if it sustains on the higher levels towards 1160, 1170 for the entire week, then we can witness a weekly breakout in this counter, and then one can definitely gauge a target of nearly 1240. But for the time being, better to wait for some kind of dip. 1100 to 1080 should be the ideal level to enter the counter.
Okay, so that's as far as Tata Chemicals is concerned. The other interesting bit is, of course, the IT space that continues to soar higher. I mean, there are several stocks that have recovered sharply from the day's low point, and the Nifty IT is at the day's high at 0.78% gains coming in. And so stocks like HCL Tech, Infosys, they're also at the day's high now and have recovered almost 2% from the day's low point. Osho, anything interesting that you spot from the IT pack that could be chased for momentum?
See, overall, IT sector is still looking on a downside, to me, I am expecting that these kind of
Okay.
rallies should be seen as an opportunity to sell in the counter for the short term period. Because looking at the major companies like Infosys and TCS, firstly, Infosys is having a is had a breakdown around the zone of 1650 odd levels. So if there will be any kind of pullback towards the zone of 1640, 1650, that can be seen as the first entry point on the short side. Second, being TCS, again, TCS has been consolidating in a narrow zone, and on the higher end, near about 4120, 4150, has seen a very strong resistance zone. So I'm expecting that one should enter a fresh buy only above sustenance of 4150. Else, any higher level should be seen as a sell opportunity in IT sector.
Okay. Osho, when you look at the broader market, especially the bank Nifty, we've seen a fantastic rally for the last 5 trading sessions, and there is no doubt in anybody's mind that the previous record high is now at within grasp. Where do you see the medium term targets for bank Nifty, say by end March?
See, overall, the most positive development which I can trace in Bank Nifty that it has filled the bearish gap on the daily chart. So the bearish gap was approximately around the zone of 40, around the zone of nearly 48,000 level, which it has already tested on spot levels today. So obviously that's a very positive development, but
Recording stopped.
it always has a tendency that whenever the stock test a gap zone level, then from there onwards there can be some kind of consolidation or profit booking can happen. So I'm still very much bullish on Bank Nifty and expecting that aggressive trade should be taken above 48,200 on spot levels. Once it surpasses the zone of 48,200, then from there onwards another 500 700 point of rally can be seen on immediate basis. But for the time being, 48,200 can be seen as a resistance, while on the lower end 47,200 to 47,500 should be acting as a support zone. So buy on dip and sell on rise is the approach that one should keep in Bank Nifty index.
Okay. So that's as far as the Nifty Bank is concerned. It's Kotak Mahindra Bank, it's Axis Bank, and it is also ICICI Bank. These three are actually contributing about 50% of the gains on the Nifty that is being seen right now. Of these three, do you prefer any one on charts right now, Osho?
Yes, Axis Bank will be my first preference. The reason being, firstly, it has been in a very gradual up move in the higher cycle of higher highs, higher lows. But in with the today's development, we have definitely seen that it has given a very strong breakout above the zone of 1100. And from here onwards, if I have to plot the sloping trend line, then near about 1130, 1140 is the zone where we can witness a strong breakout in this counter. So above 1130, one can definitely see a decent up move in Axis Bank. So I'm expecting that this can outperform other banking counters because ICICI has already seen a very tremendous up run in the recent period. Second preference will be Kotak Bank. Kotak Bank also have seen a very decent up move from the lows. So I'm expecting that from here onwards there can be some gradual up move. But looking at the historical price movement, 1800, 1820 is the zone where it generally gets stuck. So I'm expecting 1800 should be the target for immediate or short-term traders. Apart after that, one can definitely expect a up move, but for short-term, 1800 should be the target.
Okay. This should bring cheer to the ears of long-term investors of Kotak Mahindra Bank, Sakshi. I'll request the PCR to draw the longest term chart possible on Kotak. There's something that I'd like to highlight. This is an intraday chart. For the last 4 years, ladies and gentlemen, Kotak has done nothing. It's in a sideways band. 1 second, I'll tell you what the low is. Actually, when Mr. Chokalingam was discussing Kotak, I wanted to point this out. And there's nothing wrong in this kind of a thinking. I'll draw a monthly chart for you. And Sakshi, nothing from November 2020. The low was 1590 and the high has been 2250, but that one was in somewhere like 10th of October of 2021. So it's been 48 months of sideways trend as far as Kotak is concerned. We don't know whether this move will result in an all-time high, but a lots of blue chips go to sleep for an extended period of time and then come out with stellar returns. Kotak is having a nice snooze over the last 4 odd years. Let's see when that sleep breaks, and let's hope that's now, because there is a lot of momentum across the banking space, and as Mr. Chokalingam was pointing out, there seems to be some unlocking of subsidiaries. Remember one particular thing, Sakshi, about Kotak and the other private sector banks. Every bank has got its subsidiaries listed. So you have SBI Life from State Bank of India, SBI Cards from State Bank of India. ICICI has its securities, general insurance, life insurance, mutual fund listed separately, and Kotak is the only major bank which says एक ही चीज़ है मेरी, आपको अगर इन सब का फ़ायदा उठाना है, you have to buy the main bank. Kotak has a big securities and banking business, securities and market business. It has life insurance, it has so many other subsidiaries which are 100% owned by the bank, and at the moment it's sleeping, but it'll wake up.
Very interesting points, and I'm sure this is important for all the research that all the viewers will be now doing as far as Kotak Mahindra Bank is doing, because both our guests, Mr. Chokalingam and Osho, both have pointed out that they like Kotak. So you have technical and fundamental, and of course the research that Shell is talking about historically that you can refer to if you are looking at this stock as well, and if this stock also is lying dormant in your own portfolios for a fairly long time too. Now, apart from this, it's the healthcare pack that is gaining some traction, 0.8% of an uptick on the Nifty Healthcare Index. So stocks like Max Healthcare are recovering what they had lost, remember, in the previous week or so. A very sharp move coming in, 4% higher for this one. You also have the other pharma names like, Alchem Laboratories, Sun Pharma, Divi's Laboratories, Torrent, all of them recovering in trade. If you look at all of them, they are near the day's high point for sure. And last 15-20 minutes odd is when the move has really happened. Anything from the healthcare basket, Osho?
Well, I guess Zydus Life Science has been in a positive trajectory, and looking at the recent development, it was in a consolidation zone of narrow 30 odd points, and today with today's development, one can expect a breakout in this counter. So on the higher end, another 30 point of rally can be seen. So the target comes around 985 to 990 for Zydus Life Science. So this is one of the counter whose trajectory is very positive, and even after some kind of cool off, the counter has again started gaining traction.
Okay. Osho, let me draw you into a conversation with what's happening in the broader markets. What's happened to old-time favorites, RVNL, IRFC, IREDA? All of them are quiet now. Nobody's talking about them. What are the charts telling you? Anyone that you can pick, IRFC, IREDA, IRCTC, erstwhile market darlings are now sort of being regulated to the sidelines.
If I have to talk about the historical trend for these counters, then as you have told about Kotak Bank, that Kotak Bank goes into a snooze period for a longer duration, and after that comes and have a very strong movement for the investors. So all these counters which you have mentioned, like RVNL, IRCTC, IRFC, all these counters have the same kind of historical developments. Because if I have to tell you about the recent development, yes, undoubtedly, for example, IRCTC have seen a very strong up move from 700 towards 1050. But after that, there can be some kind of time-wise and price-wise correction that can be seen in this counter. Historically also, many times we have seen that this counter has given a very drastic up move, and after that for another 3 months, 6 months, it underwent a cool off period in these space. So again, after 3-4 months, when people will stop talking about these counters, they might gain traction once again.
Okay, enough of discussions. Let's just pay a little more attention to what's happening in the markets. We have 12 minutes left, ladies and gentlemen. A quick wrap up. So Nifty, strong as it can be. Let's see whether you have an intraday high of 22,500 or not. We've hit 490 for the moment, intraday basis, it's at 22,482, an addition of 125 points. So the intraday move, Sakshi, has been from a low of 22,224 to 490. So that's how much? 200 points plus 80 points. Roughly 270, 275 points is the intraday move on Nifty. The star of the day in front of you, Nifty Bank, 345 points higher. We've tasted blood on it when it comes to the intraday high of somewhere like 48,161. A brief pullback, but be in no doubt we are headed for a record high. Everything on this thing is clicking. Kotak, ICICI, Access, and in the green HDFC Bank. This is a very, very big positive. कुछ तारे बदले हैं. We don't know what has happened as far as stars are concerned, but they have all aligned pretty well as far as Bank Nifty is concerned. What's of concern, Sakshi, is that the mid cap and the small cap indices refuse to move. The small cap index is actually down 2%. Now this needs to be checked in some detail. The low for today is 15,357, and we are still down 318 points, but notice the point of recovery. From 1220, the index has recovered from a low of 15,357 to 569. So that's a 200-point recovery. Mid caps are quiet, no issues at all. I'd just like to highlight stocks that have hit fresh highs today, because that's really, really important in terms of how the momentum has panned out. Sakshi, by the time I look at them, why don't you just mark what the other winners have been?
Okay, let's quickly look at what the movers are at this point in time, especially from the F&O space. Let's look at that space now. We've not talked about that. Tata Chemicals continues to soar higher, 11% up right now. So it continues at the day's high point. So that's the stock that we will again refer to now. Pidilite Industries has improved from the morning trade, so 5% higher for this one. ICICI Prudential Life, we were talking about it, 4% higher. Oracle Financial Services, that's the one, it's inched up 3.5%. Bajaj Auto is the other one that's moved up in trade about 3.5%. Osho, Tata Chemicals 11%, and anything else from the F&O space that attracts your attention?
Tata Chemical, obviously, it has gained a lot, near about 20% in the week. So obviously, it is looking very positive as of now, but better to stay sidelines and wait for some kind of correction to get into re-entry into this counter. Other counters which are looking positive is from metal space, has again started gaining some traction. So from metal space, many counters are looking positive. First one is Hindalco, because Hindalco, after a consolidation period, it is on the verge of giving a breakout from the 100-day moving average. So I'm expecting that if there will be a follow-up buying in the metal space, then Hindalco can see a decent up move. Nearly 535, 538 should be the target that one can see in Hindalco in the coming 1 to 2 trading session. So metal space is looking positive. Even VEDL was looking very positive to me, because it was on the verge of giving a very strong breakout on a longer duration of time period, but it is hovering near the breakout zone. So 285.90 is the resistance level. Once it surpasses those zones, then from there onwards, near about 315, 320 should be the next target for VEDL.
Okay. Sakshi, let me just mark the new highs today. We'll start with the Tata Group. Tata Chemicals we've discussed. Now this is, we are just marking the stock, we are not taking a view. 12% higher, actually 13% higher, 1196. This is a record high for you. Tata Investment, this is the holding arm of the Tata Group, 92.92, another 5% circuit as it was yesterday as well. Let's also look at Tata Consumer, 1219, 1.6% higher. So these are the stocks that are from the Tata stable which are at a record high. Let's also look at some fresh names that have come up. Pidilite. Now this is interesting. I never realized that Pidilite has climbed to a record high. Yes, it has. Today's rally has been fantastic. From a low of 2700, the counter has surged about 120 130 rupees. And yes, फेविकॉल का जोड़ मजबूती से आगे बढ़ता हुआ and 2827 a record high. No surprises there. Bajaj Auto we discuss every day. We will discuss today also. Mark the fact that it is at 8629, a fresh record high. Familiar names: Bank of Baroda 282, 4 rupees higher. Sun Pharma, a change in digit 1600. So this is something new. Let's get Osho's view on Sun Pharma. Time to chase momentum again on this one, Osho.
Yes, looking at the overall setup in most of the pharma companies, they have started gaining traction. But again, the only challenge that I have observed in pharma companies that there is no follow-up buying in the same sector for the another or the consecutive session. So that can be the only challenge that can be seen. But overall technical structure on a positional basis, yes, on positional basis, it has given a consolidation breakout. So from here onwards, 1640, 1650 is the zone that one should eye for Sun Pharma, but definitely it will be taking some kind of time. Some positional bets can be seen in this counter, not on an immediate basis, which I have observed in the recent period. Because even in the last week on 27th of Feb also, Sun Pharma has given the same kind of a breakout, but again it underwent some kind of consolidation for the whole week. And once again it has given a breakout, so I have to see whether it will be having a follow-up uh, buying traction in tomorrow's trade? If yes, then obviously one should gauge the momentum.
Okay, so that's as far as Sun Pharma is concerned. What about Divi's Laboratories? How would you really look at Divi's right now from the lab space? Again, there are some fresh moves coming in across the board, and I can see 1.5% uptick now in Divi's.
See, overall, Divi's Lab is still hovering below all its exponential moving average. So I'm not very much optimistic in this counter as of now. But the technical parameters are near the oversold territory. So there can be some kind of up move or pullback that can be seen. But a positive traction can happen only above surpassing of 3620, 3640 odd levels. So once it surpasses those zones, then one can look for accumulating or buying opportunity in this company for a higher target of immediately 3800, and above 3800 there will be a very positive movement that can be seen. But as of now, better to stay sidelines, wait for uh, some more consecutive days of follow-up buying. If it happens, then buy above 3650 odd levels.
Okay, we've highlighted the gains that have come in today's markets, the positives. Let's also look at what is obviously a negative picture. No respite for Mahanagar Gas, top loser, 14% down on very, very heavy volumes, and a very sharp uptick in open interest as far as futures are concerned. Indraprastha Gas, 8% lower as far as the price is concerned. Two very heavy shorts being built up into the system. This 8% cut on IGL is accompanied by a 38% rise in open interest. And remember, we are in the beginning of March's FNO expiry. So this looks to be a bit disturbing. What else is weakening? Manappuram Finance, somehow the positivity which was there yesterday because of its rival IIFL Finance's pains with the RBI has now sort of vanished. Also on the downside as far as FNO is concerned is BHEL, 4% lower, 256 rupees minus 11 rupees, that is the loss that I see in the FNO space. So this is something that needs to be looked at. And Sakshi, one positive again I'd like to mention is Tata Chemicals futures volume.
Okay.
It's the third most active future on the FNO. Somewhere like 52,282 contracts have been traded, and each lot size is about 550 shares. So this needs to be mentioned. Very high volume, double digit gain, a record high, and this is something that you need to look at. Our show screen also shows you how the discount is towards cash. So that's really interesting. The spot is at 1186, futures are at 1179, and the red uptick that you see is the discount between the cash and the future. Sakshi.
Okay, well, on that note, Osho, many thanks for being with us onto this special edition and sharing all your thoughts there with us. And we shall see you very soon on Market Today back again. Let's start winding down the markets for you. So we've seen record high levels, and now you're seeing record high close as well on the markets. This is the level on the Nifty that you've not seen before, 22,480, just a few points away from 22,500 now. That's something that we will be looking at very, very shortly. We're closing at the high point, 122 points higher in trade. The Nifty Bank has to do much of the kind of credit lifting at this point in time. 47,963, although this index has seen slight profits being taken off the table. Now, apart from this, it's the IT space that has risen from the ashes today. 37,018, 0.8% of an uptick for this one. Broader markets were a clear disappointment as far as the small caps are concerned. 2% lower is what they are shutting shop at. The mid caps down by 0.5%. Apart from this, of course, the advanced decline ratio also shows you that the Nifty advances was slightly picking up pace as well towards the end. The pharma index about 0.7% higher, also closed at the day's high level as well. Financial services 0.6% higher, autos 0.4% uptick. FMCG recovered from the day's low, 0.4% as well. What did not do well? The PSU stocks, oil and gas, the metals pack and the realty pack. They continued to remain in the red in today's trading session on the day when the markets are shutting shop at record high levels as of now. The top stocks, Bajaj Auto, clearly 3.4% higher as the top mover on the Nifty. Kotak Mahindra Bank, Bharti Airtel, SBI Life, Axis Bank, Sun Pharma. Those were the top movers as far as the Nifty is concerned. Of course, contribution coming in from ICICI Bank, Axis Bank and Kotak Bank in tow. On the downside, what did not do well on the Nifty? The stocks that were the big losers, Adani Enterprises 2% down, NTPC, Ultratech Cement, BPCL, ONGC and Adani Ports. These were the top drags on the Nifty. In the F&O space, Tata Chemicals stole the show, 11% higher is where it's ending at. Pidilite Industries, Oracle Financial Services, ICICI Pru were the top movers. Anything else, Shell, that you wanted to highlight?
Yes, Friday is a holiday and markets are partying ahead of that.
Absolutely. So it's an early party that's really happening and we don't have any complaints thereof. On that note, we will wind up this special edition. Many thanks for being with us onto this special, and we will see you soon tomorrow morning with all the market updates. But action continues on your screens on Business Today, so don't go anywhere.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.